Hey guys, Mike here. So it looks like the market did not care about the Moody's downgrade as we discussed this weekend and said, whatever. You know, the index is kind of mixed, but mostly just flat and stuff all day long. Recover from the sell-off I had this morning, which everybody's like, we're going down. It's like, no, we're not. You know, because then when I get in the chart, you'll see exactly why we stopped going down this morning and went back up. Now, of course, there's going to be a lot of information in this video for you because I got some quarterly information that got updated and some other monthly information on certain topics, which I like to keep you updated on because especially when I see like fear mongering going on, because they'll give you like on Twitter. I don't really do Twitter, as you know, or social media. But, you know, they'll give you one snippet of it and you know, oh, look what's happening. It's going to be bad. And then they'll give you the full picture. So I'm going to give you the full picture and let you as an adult, the smart people that you are, judge for yourself and stuff. And so hopefully that'll help out because I believe in the truth. And then we'll get into some other stuff. But I do want to ask real quick and just take a poll for like, real quick here. Like, who are you people out there actually wants it to get dark early, right? We switch times and it looks really bright back there, I guess, at least on my camera it does. But trust me, it's not. It's just this light and the camera effects or whatever because the market's closed right now and everything. And here and on the Eastern time, it gets dark now at between 5:15 and 5:30. And so I'm just curious, you know, I know we try to pass many bills in the Florida legislature, federal legislatures up there about, you know, keeping it light or keeping it, daylight longer, which normally in normal times, 6:30-ish usually, maybe 7-ish when it gets fully dark, and which is great. But I'm curious, who in the world and why do you want it to get dark early? Like, who are the people fighting these bills? I'm just kind of trying to meet you because I've never met anybody that wants to do that. My wife's families are farmers, and they're like, no, please stop. We like when it's light, it stays daylight longer too, so we can get more work done and stuff. And I'm just curious because and that's that is my real backyard back there. By the way, I know some people think it's a fake thing, but and in my backyard, like we're big on trying to get our son out instead of being in the house. I mean, I literally have built a freaking obstacle course back there. I have a tetherball court, one of those gigantic soccer nets back there, a freaking 30-foot climbing rope into the tree, a badminton net we like to play with and stuff. I don't know what else I got back there, but there's no excuse to be inside. That's basically what my whole goal was, right? And I like building stuff anyway. So but when it gets dark at 5:30, like, come on, you gotta be kidding me. And so it just sucks. So I just want to take a poll, figure out who in the world wants that. So anyway, so getting into the fear mongering part, I always like to keep you updated on this, right? And it has to do with us, delinquencies, right? And so we finally got the updated numbers on this and stuff. And I like to keep you up to date. And it might surprise you. Like, when you look at this, you do see an uptick. And really 90 days is where you want to really see it, the number at, right? Because that's when people go, uh-oh, it's getting rough, 3 months delinquent here. But when you take into context and look at this, you go, man, that hadn't even eclipsed 2019 yet, right? Or 2018 or 17 or 16. I mean, it's still very low, even though you are seeing an uptick. And again, when you look to the left, going into the last real recession, you'll start to see this uptick. That was to the extreme because most people lost their homes during that one. But again, that's what you want to see, especially in the 90-day area. But again, keep it in context. Look at 2018, 19, 20. We didn't even eclipse that yet. Why haven't we? Well, it's pretty simple. When you look right here, what's happening? Well, on the 90 days part, you can see each type of loan that is supposedly ticking up. Student loans, nope. They just kick back in October, and you didn't even got to pay them really because they're not considered late if you don't pay them for the first 12 months. And I don't know how many times they give you a grace period on that. If you do know, please put it in the comments. But you see auto loans, not really. HE revolving credit, that's home equity loans. Nope. Mortgages, no, because over half the country is setting in mortgages like below 4%. And a big chunk are setting in like 3% below, right? And so, of course, credit cards, you're going to see it because the rates are through the freaking roof. And you got a large portion of the country, who don't make a whole lot of money, who's living off credit cards and getting ate up by all these interest rates and stuff. They're showing the hurt, of course. No doubt about that. But again, looking at this in context, you just don't see what people are trying to put out there, that things are falling to pieces. Could it happen? Of course it could happen. There's no doubt about that. But it's hard when you're setting in mortgages like we're setting in right now. I keep saying that. But just want to update you on that. Plus, this is what everybody's looking at for CPI tomorrow. And all these are in line right now with what they think is going to happen. You can see core has just basically been stuck, but the market don't seem to really care too much about that. But the biggest thing to watch is the dollar and watch yields when this happens. Because if it comes in line, most likely you'll see the dollar drop and more importantly, yields drop. And you can see things like gold pop, and of course stocks are going to pop for sure if yields drop. So just kind of keep that in mind. We'll see what happens. Some people are saying there's going to be a surprise. I don't know about that one because oil has been just tanking, and that has again it's a delay to get into the CPI, but it's kind of what brought the numbers back up because it just goes into it affects so many things, right? And so we'll keep an eye on that one. Now, another thing that's funny to watch the market do is ignore these idiots we call Fed speakers, right? They're bringing out 20 of them this week alone. 20, because 21 would have been too much, right? And so I think that may be a record. I don't know. I don't think Papa Powell's even on here. But again, they're all over the place anyway. The market don't seem to care what these guys got to say. It really doesn't, which is kind of funny to see now. But again, now something important to watch here is, and before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. You're starting to see a little diversion between HYG and the SPY. That is SPY right there, which continues to go up. Then you got HYG. It's continuing to actually kind of go sideways and actually trade down some. And so HYG is a smart money. And so let's just see, because I don't see anything on the RSI divergence on it, but let's just see if this continues to diverge or not. Because, let's be real. We know we're overstretched. Here is the RSI and the SP 500, and you can see you get to the 2 hour, you're starting to see some bearish divergence. And you get to the 4 hour, and you're like, you're seeing higher highs on this one. It's kind of just trading slightly down the RSI if you want to look at it that way, but also it's just kind of sideways. It's simply because this has been a huge move up, an absolutely enormous move up in a short amount of time. What's interesting though, when you look at the S&P 500, is the percentage of members on 52-week highs. Like, this always trips me out looking at this when they update it, because when you look at that, that's where we're at now. It's 5% or less, right? Making new 52-week highs. And when you look at it, this right here was supposed to be the bottom, that October part. Even then, 9% maybe maxed out right there. June, you had the biggest, but just look over to the left. Look at 2021. Even the beginning part of 2022, when we had, I believe, that right there was a bear market rally in between March and May right there. You had 10 to 15%, but it's just so few stocks right now that are actually making new 52-week highs. It's just nuts. It's one of the, again, a time of first, I guess, like we've never seen it before. But we noticed the Mag 7, some other stocks continue to carry this market without small caps and a lot of high beta names. So I'll show you a chart on that tomorrow, which just amazes me. But when you look at the S&P 500, what we talked about, we said this is the October highs. It broke it. It's going to come back down. It needs to retest for support. It's exactly where it bounced today when it started selling off this morning. Filled that RTH gap, and that right there is an RTH gap right below, which I need to get rid of. But where is it going to be going? When we look at this right here, you bring your moving averages up. Again, it closed above the 100 now, so it is above all three on the S&P 500, and that 50 should start to turn up. And then you're going to have that descending trend line now. It's going to be support, the October high, which is going to be support. Again, 4,400 was key, which it held, by the way. Broke through it this morning, got back above it. And so it does have support if it starts to move down. Now, looking at Tesla, which was huge today, finally, this one right here finally broke out after being, it was the weaker of all the Mag 7. Now it was the stronger by a country mile today. Got back above that 200, which we talked about. There's that volume gap, which we're looking to see if we can get into. That's where it got stopped today. It was right at the top of the resistance right there before it got into it. Probably saving that up for tomorrow. Of course, we'll get into what moved Tesla in just a second. We get done with this chart right here real quick. But again, if it starts getting above 224-ish right there and getting that volume gap, this can move very fast, right? Because we know how Tesla likes to move, and it likes to move in these gaps like a lot of other stocks. And when we look at the hourly, again, we closed above the 200 today. I'll go ahead and take that RTH gap off, which we absolutely feel today. And then there's that huge RTH gap, regular trading hours gap, right there after the earnings when it sold off. Now, of course, if it starts to come back down, you do see support below it for sure. And of course, what do we know moves Tesla? It's news and options, right? So this news came out for the market open, talking about the large British petrol station operator EG Group said it would basically buy Tesla's ultra-fast charging units, which was great. But the big thing was the call flow. Told you, look for the call sweeps, right? And it'll be in the millions, and those started flowing in, and that's what gets this moving. Don't ever try to get in the way of Tesla. When these huge $1 million sweeps start rolling in, because that's what pushes this up. It's just the way it is. News and options, not fundamentals. And that's what you saw today. Now, we'll see if it's going to keep going, obviously, after a big move today. But if it gets in that gap, then you'll start having FOMO will probably kick in or not. So just be careful on that one. Now, Microsoft, of course, did what it was supposed to do as well. It got a new all-time high Friday, came back down, retested that area, and now we have to see if it's going to turn it into support. Again, just look at that chart. That's Microsoft. That's not Tesla. Look at that. Straight up like a cliff, right? It's just something, normally that's not how Microsoft moves, obviously, but big money started just rolling in this freaking thing. And up here, the air is thin, all right? There is no resistance. So once it gets above the new all-time high, we just have to see how far they want to push this thing. Now, Apple, we talked about this. Got those 3 touches on that trend line, different way to look at it. Told you, what was it, Sunday, we need to retest this and turn this support. That's what it did today, okay? If that's the case and it gets right above, it was like 185, I think that is, then it can move up. It'll fill that little regular trading hours gap right there, and then start heading towards around 194 will be the next level to be looking at on this one once it breaks above the September highs. And again, Microsoft, Apple make up the biggest percentages and weights of the S&P 500 and the QQQ or the NASDAQ. So if those start going again, obviously the big move is going to continue. Could they use a breather? Absolutely. Now, BABA real quick. You can see this right here, that trend line we talked about that it broke out of. All it's doing is testing it multiple times. MACD looks terrible. Momentum looks terrible. Again, that's a lot of resistance start moving through right here. That's where all that volume was at. And it needs to get above really like 88 to really start having a significant move. But it's just one of these Chinese stocks. Some of the Chinese stocks are busting out, but this one's just not, right? It just doesn't have the volume it normally has. And again, it does have support down below that we know if it does start to sell back down. But that MACD needs to get above that 0 line and just start seeing buyers. Now, SHOP, we talked about this trend line. Got our 3rd and 4th touch, now a 5th touch. So we'll see if this can finally break above this 62-ish level right there. You can see this still is right now a descending channel right here that it has been in for going back to July. So it still hadn't broken out of it like the NASDAQ and others has, or the stocks that is. And so if it can, though, you're going to see it start heading towards that September high of around 68 and then break above that and go to 72, which would be the July high. Now, one thing else that's happening here, as you can see on that weekly MACD, it's getting a bullish cross. And so if this rally continues, Shopify, 70 is usually where it likes to go to and then get rejected, but we'll see how this plays out. Now, Disney, you can see right here, obviously has that RTH gap to fill after earnings right there, but it's getting close to that 200, just consolidating right here, and we're going on a smaller time frame. Looks like it's just trying to wedge itself in for another move. Most likely the move will probably be higher. Looking at this right here. But again, we'll see if it just keeps wedging or not, or if more volume continues to push us up and you can finally get past that 200. Again, this chart is damaged beyond belief, so it just has a lot of work to do. But when you look at it, you can see when you pull up that volume profile, does not want to break 88-ish, but if it can get above that, then you got 92 in your sights right there. And it'll finally get out of that shaded box right there, which it seemed to have been in forever. But if it can get above like 93 right there, that's when you start to get a real move. See that volume gap right there? That's where you want to get to if you're Disney. Now, when it comes to earnings, again, it's a lot of retail stuff and things, but you'll have Home Depot in the morning, you have C, PaySafe, and then in the afternoon, I don't really see anything on here that, is worth even mentioning. So there's no earnings that are going to shift the market at all. And then, of course, you're going to have plenty of data because you will have NFIB Business Optimism Index, core inflation rate month over month. You see the bar is very low. Just said it's going to stay the same. And then regular inflation or headline inflation, month over month 0.1, which would be a drop from 0.4%. And then your year over year, which I don't even see a forecast for that. They're saying 3.7. I believe people are forecasting around 3.4. But I believe we saw the big banks earlier, they're forecasting about 3.4, 3.3, somewhere in there. So that would be a drop. So you can see core, if it comes in where it's at, it's still just, it's extremely sticky. It's not really moving versus headline, of course, still coming down. But it really just depends on how fast, or, I don't know. I always joke around about it and say, they put those numbers where they want to put them. They'll say, oh, well, we want to include eggs or, these other categories and see how it goes or something. So, again, I know people say, groceries are still expensive. They are still expensive. They're just not increasing as much as they were like 9 months ago. But yes, they're still very expensive. No doubt about that. Put that in Saturday's video to definitely say, yes, when I said 12 bags, I mean like 3 items in each bag, and it's plastic bags. So, but that's where we're at on that. Let me know in the bottom what you think CPI is going to come in at. I mean, I'm expecting it just to be a nothing burger. I think we'd all be stunned if all of a sudden it just hit and it was way higher and everything than the market would have thought and everything. Because, does the market, again, does it need a breather? It should, after this rally, just take a breather. But again, it does have that support. I'm just looking to see if, was it 4,400 I told you holds. Those trend lines at war resistance are now support if it tests them and continues to start to bounce. Usually this part of November it's either a sideways or, kind of a small move down, but nothing major. And I don't really know of any news. Can you think of any that should shock us once we get past CPI? Because remember, we don't even have an FOMC meeting until what, December 13th or something? And besides that, I'm trying to rack my brain and think of something that would really just stun the markets right now. And I can't really think of anything, but again, we'll see. I'm just looking for like a healthy pullback to set that. I mean, correct what I said yesterday, a higher low, not a lower low, a higher low for the move to continue up. So, we'll see what happens. Let me know what you guys think in the comments and stuff. Please hit the like and subscribe button right down there. Really appreciate all you guys. And I'll see you tomorrow. So have a great night.